Well, economic growth figures released today have disappointed many, and our economics correspondent Patrick O'Mara joins us now. He's been looking at the March quarter GDP figures.
Well, hi Rowan. Yes, well the market had expected 0.7%, but it came through at 0.5. That followed 0.4, so we've had 2 quarters in a row of rather subpar growth. Now agriculture did bounce back this time after a slow start to the season last year, but construction activity, that fell. It contracted for the first time in almost 2 years. Now that fall in construction we think is a timing issue. Basically there was a lot of industrial and commercial projects which finished at the end of last year, which bolstered that number in comparison. But David Kelly, he's the chairman of the Construction Industry Council. He says the industry has got plenty of work on and that demand for housing and building premises is still pretty strong. But he does warn that the cost of land in Auckland is holding up activity.
There are some issues in the Auckland market. If I compare it to the regions where previously it was a bit quiet, they're really going gangbusters in most places. Christchurch, of course, coming off the peak. But Auckland, the challenge is around land price. And in terms of building at scale for residential development, a number of the larger builders are just saying they're a bit cautious because they've got to be careful about how much risk they take on.
Now, Rowan, for the year we saw growth of around 3%. Look, that's pretty solid, but once you factor in the population growth that we've seen, look, the gains are pretty thin. They're very mediocre. Look, there's still plenty of people out there who still think this is going to be a fairly solid economy, and some very good reasons for thinking that. Dairy prices are on the up. In fact, agriculture as a whole is on the up. You've got that population growth. Household spending has held up. Business investment rose to its highest level in 7 years. So, look, very strong reasons for a good economy looking ahead. Look, we should probably also point out that in the OECD stakes, New Zealand stands out ahead of countries such as Australia, the US, Canada and Britain.
Yeah, so that's they're saying that New Zealand has actually done pretty well, but there's still a bit of room for improvement. Is that right?
Yeah, there certainly is, and this is where this OECD report has kind of highlighted bouquets for the economy, but brickbats really for productivity. Look, in fact, the CTU calculated that they think productivity, just in that March year we just saw, actually fell back 1.3%. And New Zealand has been a serial offender in this area. Now, the OECD, it's got a number of recommendations that it thinks will fix that. It's always got a lot of recommendations. Cutting company tax is one of them, reducing barriers to foreign investment, giving councils more latitude to build infrastructure that they need to support the housing supply that's required. For example, they think that some of the GST could go to them. As we heard though from Stephen Joyce, really that's not his bag at all. Governments tend to ignore the OECD recommendations. He's no different. But look, the OECD's chief economist, Catherine Mann, who is also in the country, she points out that many New Zealanders are overqualified for the jobs that they have, and that also is hampering productivity.
What we have found is that many people who have the high technology skills, in fact, don't use them in their jobs. So there's a mismatch between what the skills they have and the skills that they use. And if we could get a better match between jobs and skills, the productivity growth in New Zealand could be about 2.25 percentage points higher.
What she means by that, Rowan, is that means more money for those people. And of course, Rowan, are we overqualified for our jobs? Well, I'll let you judge that one.
Not for the one I'm doing today, Patrick. Now, what's been happening in the markets?
Look, very strong day on the markets, up 0.4% or 32 points at it's 7,516. Look, it's creeping up close to those highs that we saw in early September last year. The New Zealand dollar, look, a touch weaker after those GDP numbers. It was down about 0.5% against the US dollar at 72.2 US, and against the Australian down about 1 cent to 94.9.
Thanks very much, Patrick.